Rady Asset Management.
Harry Rady of Rady Asset Management.
Joining me now to talk about the action and what's ahead is Harry Rady, the CEO of Rady Asset Management.
Well, Harry, I want to go to you first.
You know, I've had the opportunity during my career to serve on the board of directors of a number of publicly traded financial institutions. And during my time on those boards, we actually went through similar stress tests.
The primary members of the investment team are both Harry Rady and Ramu Singh. Both of them have actually extensive experience over 35 years in the industry. Harry and Ramu both have MBAs. Ramu also is a PhD candidate in finance. In addition to that, myself on the operational side also has an MBA.
We place a lot of emphasis on the qualitative side of the research. We also dig deeply into the annual reports of the companies. We look at all the footnotes, which a lot of the analysts, I believe, ignore.
At Rady Asset Management, we take compliance and registration and everything very seriously. We're an SEC-registered firm.
Our philosophy is really to be contrarian. And when I say contrarian, that means we buy when others are selling, and we sell when others are buying. And that gives us a unique opportunity to buy assets when they're on sale.
You know, we're a contrarian deep value investor, and the more uncertainty there is and the more blood in the street there is, the more opportunity it creates. You know, these stocks have been decimated for the last decade. The expectations are dismal, and then with the healthcare bill adding additional uncertainty, it just creates opportunity to buy these stocks at basically half price. I mean, they've got pristine balance sheets. They've got product pipelines. I mean, the opportunity is extraordinary. You know, we're bottom-up stock pickers, and so we think we've identified some very attractive companies trading at unbelievably low multiples that we think will do extraordinarily well in any circumstance.
What's your assessment of what happens here in 2009 after a great run for stocks in 2010 after a great run in 2009?
You know, it's certainly paid to be long only, but you know, we run a long short fund, so obviously a little biased, but we think long short is going to be the place to be in 2010. You know, we want to own the best of the best, blue chip, dividend paying, dominant companies. And many of these utility stocks are down 50% and trading at decade-low valuations. And we think that this is just, we just think if they go back to market multiples, that there's 40 to 50% upside. When all you gotta keep is strong, move along. So we're certainly adding to our short positions. You know, basically, we're long the cheap, out-of-favor stocks trading near their lows, and we're gradually shorting these high expectations, extrapolate up to the sun type stocks. And, you know, we expect to have to deal with a little bit of pain, but we think we're going to be rewarded. 1, 2, 3.
Rady Asset Management offers two publicly traded mutual funds, a traditional long-only vehicle. In addition to that, we offer a long-short mutual fund. This is something that's not widely available in the industry.
To date, hedge funds, number one, they've been perceived to be risky, and number two, they've only been available to large institutions and sophisticated investors.
We are now making this accessible and available to all investors.
You know, one of the things that sets our fund apart from others is an alignment of interest with our investors. A significant portion of my liquid net worth and my employees' net worth is invested in the fund. When the fund does well, and we make money, our investors make money. When the fund does poorly, our investors lose money, we lose money. And we think that alignment of interest is extremely important. The most rewarding thing about what I do is protecting people's life savings. You know, people save so that they can have a better life for them and their families. Our focus is on managing risk. We don't want to lose money. At the same time, we're here to make money.
Harry, I want to give you some kudos here. Watch him smile. Harry's going to get all happy here. Harry's actually outperformed the S&P both last year and this year. Right now, do us a favor. First, tell us how you're doing this year against the S&P.
Well, I appreciate the kudos. Unfortunately, I'm not able to comment specifically on performance.
Okay,
but,
I know you're beating it, right? I can at least say that, right?
Yes.
So to know that we're working harder, working smarter, that we're able to uncover stocks and opportunity that others have missed is a really great feeling. It's like the world is a giant treasure hunt for me.
I got a feeling that tonight's gonna be a good night. That tonight's gonna be a good night. That tonight's gonna be